Hello and welcome to Send It by OKEx Insights. Today we're going to be speaking with Hunain, Adam, Olivia, and Rick. We're going to be talking about the potential of a Bitcoin ETF, about the role of media and choosing stories, and also some markets, which we're going to get right into. And I'm going to send it right over to Hunain and say, what's up with the markets today, Hunain?
Yeah, thank you, Max. Markets are doing really well since the last time we talked about them on our podcast. I think Bitcoin is up nearly 30%. It's had an amazing October, and we saw Bitcoin kind of consolidate for a bit between around 48,000 before it broke through 50, and then it just hasn't really stopped. And at the time of this recording, it's trading around 55,000 USDT. And we're also seeing decent volumes, so I wouldn't be surprised if this trend continues. On the flip side, though, altcoins are not doing as well right now because Bitcoin dominance is going up, which is to be expected in this kind of cycle of the market. If Bitcoin continues to go up, we're probably going to see alts take a break, and then when those profits cycle back into them is when Bitcoin kind of stagnates a bit. On the other hand, though, we've seen a lot of meme coins, dog coins, get a lot of traction this week, which has been those gains have been significant. So for example, Shiba Inu had, I think, this week alone gains of around 190%. So there's a lot of talk about that, and I know that Adam has been discussing this in our CMDs. So I'll send it to Adam to give his comments on meme coins.
Hunain, like you said, so when Bitcoin goes up and Bitcoin really leads the market, we do see that altcoins tend to underperform against Bitcoin. And this is what has been happening the last 2 days. Now, standing out from that in really stark contrast, and something maybe I don't really remember seeing before, is that these meme coins, which are all tied to like dog names, are really outperforming, but not just like Doge. Doge, compared to Doge's history, is seeing relatively like mild to moderate gains, whereas stuff like Baby Doge, Akita, Sheep, and these tokens are really, really going, like you said. And I tweeted out today that I don't want to be a top caller because there's very little to benefit from being a top caller in a bull market. But I do think that it's a signal worth being skeptical about when you see that meme coins are leading the market, because that signals to me that not retail investors, but let's say retail investors that are purely interested in it for speculation, for gambling, for making money quickly, for getting rich quick, are in, and they're in now. Now, because these meme coins have only really started to like moon for all intents and purposes over the last like couple days, I think there's more room for them to keep going if more people tell their friends, oh, I made so much money on this, more people can pile in. But usually when these things happen and we see this kind of energy in the market, it generally doesn't end well. Now, the reason that I think this is different than when Bitcoin was at its last like all-time high, when Bitcoin topped over $60,000, I think we saw a lot of just retail euphoria everywhere. And now I don't see any kind of euphoria in like the altcoin market, generally speaking, which would make me believe that we're getting near like a macro top for the market. But with Bitcoin seeming to be breaking out and really interested in making a push at its all-time high and potentially going past that, it's really interesting to think of how these meme coins actually factor into that, because there's a very specific type of investor, I really believe, that drives these meme coins. I literally had a friend DM me on Instagram 3 or 4 days ago, the day that Instagram and Facebook and all that stuff went down. And he asked me if I think there's any chance that SHIB reaches 1 penny. And I told him, no, I don't think there is, because right now it's like 0.0001 or something. So I haven't even done the math, but I don't know what its market cap needs to be to get 1 penny, but I'm assuming its market cap would have to get like absurdly high. So yeah.
There are 4 zeros and a 2, by the way. So
okay,
0.000002.
Yeah, so that's a lot of gains. But yeah, so I struggle to say it's like the top for Bitcoin or something like that. I don't think that, but this meme coin stuff, I think it has more legs to run because I think a lot of people who just only care about getting rich quick, those type of people can try to pile into this stuff. But again, more people lose money than make money, and it usually doesn't end well. So we'll have to see how it plays out.
Yeah, really interesting. I think on the one hand, we have these dog coins going to heaven. And on the other hand, we have Bitcoin is also following this really, really interesting path. It's been testing this area, as Adam has been pointing out in CMD for weeks now, this really testy area of resistance, but where it's finding support. One thing we've been talking about on our offline calls and in podcast even last week, we were discussing what would it take for Bitcoin to really break out and find a new catalyst towards new all-time highs. And last week, we discussed a potential Bitcoin ETF as being that catalyst. Since then, Bloomberg has come out with their own analysis saying that they are predicting a futures-based Bitcoin ETF is 75% probable in the month of October. For listeners who don't know, an ETF is an exchange-traded fund. It works similarly to a stock so that it is traded on exchanges by shares of this ETF. And the ETF can really represent a lot of different things. One way to think of it is a basket of assets or of commodities. So, one example would be like a precious metals ETF, where instead of buying gold physically or silver physically or bronze physically, you have a fund that buys gold, silver, and bronze. And you can just buy a share of that fund. So this is a regulated mechanism that allows retail and institutional traders in the US more exposure to asset classes. Now, Bitcoin and a Bitcoin ETF has long been the hopes and dreams of many in the crypto industry. We've been talking about this for years, but Bloomberg is now predicting a change in maybe SEC sentiment, maybe a potential chance for them to give regulatory approval for an ETF. And it seems like a strange time for this to happen, considering the new administration. But we're going to get all into this. I'm going to send it over to Adam, see what your thoughts are on this.
My thoughts, I think the more interesting part is why there's odds on it being approved now when it's being delayed and rejected for years, and what has changed that would lead anyone to believe that now it would be accepted after we just had the Litecoin fake news pump and dump that proves the market can be easily manipulated, and we have a government in the United States that's extremely anti-crypto, generally speaking, the SEC and the Fed, and even largely a lot of people in the Biden administration. So my question, isn't necessarily what is a Bitcoin ETF, even though it's relevant. It's more of why does Bloomberg have 80% odds on pro shares being accepted?
I mean, with the Van Winkle, the Grayscale Bitcoin Trust, I think is what it's called, right? Yeah, yes. That trust is a capital T trust. It's a part of its name. It's not actually regulated as a trust. So it is literally just it's a fund, but not in a way that exchange traded funds are that are regulated. Yeah, but so it's essentially.
But what does that mean on a practical level? Because what I'm trying to say is if I'm an institutional investor and I want exposure to the price of Bitcoin in a regulated way on Wall Street, I can buy GBTC. So what's the difference for me between an ETF and Grayscale? And Grayscale wants to turn into an ETF to save themselves because they're the premiums tanked. So
the 2 or 3 main things though. First thing is that it's a closed fund, right? They decide how much you want. They decide how much they issue, and you can't redeem them. That's the biggest thing. There's no redemption for GBTC, so you can't. If you have the GBTC, you can't go to them and be like, "I want Bitcoin back." You can't do that. You can only sell it on a secondary market. That's one. Number 2 is GBTC's. I can't remember correctly, but it's not regulated as a trust, like Max said. It's regulated, I think, as a grantor company or something. And what they do is they're just issuing this number of shares that they manage as a trust. And people who buy them, they also understand that the value of these shares does not have to match the value of Bitcoin. So that's why we talk about these GBTC discounts, right? Because they trade under the net asset value of Bitcoin. An ETF will never do that. An ETF will always follow the price of Bitcoin because it's a security that will track it. So GBTC, there are a couple of things with that. GBTC also has a very high management fees. They also have a lot of transaction, like, you spend a lot of money. So there's not a lot of efficiency in buying in exposure to Bitcoin via GBTC. And like we discussed, I mentioned earlier, that you also have to kind of realize the fact that at times your GBTC will be valued below what Bitcoin is valued. So it's not really efficient in that way, and you can't redeem it. So the thing with ETFs is, and also GBTC trades OTC only, if I'm not mistaken. And with an ETF, the point is that you can trade it on an exchange like a traditional exchange. So an ETF is more, it's a very bullish thing. And why is it bullish? A lot of people don't really, realize why it's so bullish. Like, why is such a big deal, right? The point is, an ETF is like a clean sheet for anybody to just go on a regulated stock exchange on whatever market they're trading and just buy Bitcoin. They're not buying Bitcoin, obviously, they're buying an ETF, which is tracking the price of Bitcoin, but it's like exposure to Bitcoin from within their brokerages, apps, and whatever not they're already using. And they don't even have to do self-custody. They don't have to put it in their wallets. They don't have to trade on any exchange like OKEx, which can be sometimes a barrier to entry for a lot of new people, because they're like, I don't know, how do I make an account? How do I do this or whatever not? And especially older investors. And by older, I mean like more established as well, not just age-wise older. So let's say large institutional investors at times are kind of reluctant to, directly deal with cryptocurrencies. So an ETF will just give them a chance when they're buying, let's say, a Tesla stock, they can just alongside that just buy an ETF for Bitcoin, right? So that's one of the bigger differences. And also the fact that an ETF can be redeemed always and whenever you want. So if they want to sell that and get, whatever cash, because it's going to be cash settled, if I'm not mistaken, it's not Bitcoin settled.
In this case, well, the speculation,
yeah, but at the back of it, the market makers, they have to hold a certain amount of Bitcoin, which is kind of backing the ETF. So it has to be backed, I think, at this point. My understanding, that has to be backed, obviously, because they have to. So what they do is whenever a company goes on the stock market, when they go public, like Coinbase or whatever, what they do is they issue the number of shares, right? They float those shares in the market. So that's what whoever is going to get approval for this ETF thing, what they're going to do is they're going to make sure that they have a large pool of, let's say, Bitcoins. Then they're going to obviously value them, and then they're going to float shares, which are ETFs, in the same value, and they will be trading on these stock markets. And then anybody, not necessarily an accredited investor, that's, I think, the main thing here. Anybody can just be like, I want one or two or whatever not, and they can freely trade them, freely redeem them. And that's why it's bullish. And it will never fall below the price of Bitcoin. So it'll never trade on a discount or a premium, so to speak.
Right. Yeah, I think, Hunain, I think you're touching on like the three sides of the same coin, if that makes any sense, from what I understand. And like I was talking with Hester Pierce, the SEC commissioner, crypto mom, and she was saying that like the three things that they, like the SEC is looking for are like liquidity, market manipulation, and price surveillance. And those are all kind of three things wrapped up into one, right?
Yeah.
Like, I mean, the liquidity, gives you a better sense of like market manipulation, right? Something that's really illiquid could be manipulated. But like also the price discovery, like the price surveillance is the way to see like that this is the actual price of Bitcoin. That like an ETF isn't trading below that or above that or something, like it should be the price. So I think those are the three things that the SEC has been delaying, especially the physically backed proposals. It's mostly been on those three things. And, they've been holding the same line, as far as I understand, since 2018 or 2019, which is like, oh yeah, like it's not quite mature yet. It's not quite there. But, in the last year or 2 years, we've seen so much institutional investors, like actual market makers, liquidity providers, be gobbling up Bitcoin whenever they can. And maybe that is the time when it says, okay, well, there is liquidity. We know the price surveillance, market manipulation. Yeah, it could happen with some smaller cap, like altcoins, but crypto is like not a general term for all coins. Bitcoin is something a bit more mature than anything else. So yeah, I don't know. What do you guys think? Maybe Adam, Olivia, Rick.
I'd like to raise the point that it's a Bitcoin futures ETF.
Yeah, that's what I was gonna say. Yeah.
That they're talking about. It's not and to my understanding, I'm not an ETF expert, but that means that they only need exposure to Bitcoin futures and not Bitcoin, the exchange offering it. So that would caveat the bullishness that Hunain raised. That
Because backed already exists, doesn't it? If you want exposure to Bitcoin futures.
well, exactly, and
Yeah.
that was a buy the rumor, sell the news, wasn't it?
Yeah, but then
that's what I
back
was-
turned out to be a pretty big deal, though. Go ahead, Olivia. Sorry.
No. That's just what I wanted to clarify, because the prediction now, right? Like the
80%.
75% chance that something will be approved is specifically referring to these futures, Bitcoin futures backed ones. And I'm just like, is that going to be something where like people are confused about, like the impact could still be really bullish because people don't realize that it's different? Just like in the larger market.
I think the first thing is obviously this prediction right now, which has come out. It's also a good thing. I understand that the reason behind them trying out this approach potentially, obviously it's just still a rumor, is because CME and CBOE and whatever, they're already there and they're already trading these futures. So there is kind of like that trust has been built. So what Max was saying earlier, I wanted to answer that. So from the SEC's perspective, what they really want to do from a theoretic perspective is to protect investors, right? They want to protect the retail investors. So anytime a company issues stock on a stock exchange, they have to go through this rigorous process of getting their books audited, making sure that their books are in good order and that they have a legitimate business with like it's not essentially just trying to make sure that it's not a scam, that when those shares get on the market, people who buy them, they're not going to be scammed because of somebody not doing their due diligence. So obviously when the SEC just wants to do their due diligence before Bitcoin can be given this, retail traders can be given access to Bitcoin in the form of an ETF. So their questions about price and its reliability, manipulation are kind of, obviously they are relevant and they are good questions to ask before you let retail investors have this simple exposure to a very volatile asset. And that makes sense. So what they're doing, if they do a futures backed ETF kind of a thing, is it's like one step forward, at least one step forward. What they're doing is they're kind of relying on the infrastructure that's there with CME and CBOE and the futures trading already. And they want to see how that goes and then potentially do a spot one later at some point.
To Hunain's point as well, it also negates the custody requirements that the SEC was quite adamant that the current custody solutions weren't up to scratch for an ETF.
Regarding the odds, I find like these odds that have been circulating to be really strange and sort of higher than I would have anticipated, the odds of approval. And I think that I would also like to raise the point that in 2018, there was a story that broke about how Bloomberg writers specifically were paid bonuses if they manipulated the market. And to me, I think about this a lot and I bring it up a lot anytime there's like a big mainstream financial media story, such as this one. And I'm not saying that these rumors being floated are for the sake of pumping the price of Bitcoin or something like that, but it definitely makes me skeptical.
Yeah, for sure.
Yeah, no, I can definitely, but maybe that's the test of market manipulation, like if these rumors are floated and it really does manipulate the price. To take it into, traditional markets, it's like if there were rumors that, Disney was going to buy HBO, would that have an impact on price or something like that? Would that be the same understanding of manipulation that we are facing in the crypto industry?
Well, we knew what happened the moment that the news broke that Tesla bought Bitcoin, right? So
yeah, but they released that. That's not manipulation necessarily, though, right?
No. No, but what Elon Musk does on Twitter is obviously manipulation. Not just with Bitcoin, with everything. With
Sure,
Tesla's stock price.
But he can do that with Tesla too, and Tesla's traded on regulated exchanges. So it's kind of like, I feel like the post GameStop era is making market manipulation questionable.
All markets are manipulated.
Yeah.
The precious metals market is incredibly manipulated as well. There's always reports in Bloomberg, for example, of JP Morgan, I believe, they got a slap on the wrist penalty for spoofing the precious metals markets. And I'm sure they're not the only ones that have gotten caught doing it. So, I mean, all markets are manipulated. So that argument, the market manipulation argument, I think was more relevant in like 2018 and 2019 when, that was the primary reason for ETFs being rejected. And I do think that probably today it's less manipulated than ever. And
then if it's less manipulated than ever, sorry, Hunain, I'll jump back to you in a second, but like, so if it's less manipulated than ever, if there is like, good price discovery, and if there's solid liquidity, in some way, like, why wouldn't the SEC allow a Bitcoin ETF? Because if there isn't a regulated vehicle, then people are going to go in the unregulated route.
Maybe they'll pass an ETF to regulate it because the chair of the SEC is like obsessed with regulating crypto. So maybe that's reason enough.
And then he can paint the rules how he wants them, Hunain, you were about to jump in and say something. I cut you off. Sorry.
No problem. No, I was saying in terms of manipulation, I don't think today we're talking about news-related manipulation like today, as in recently. I think that's gone. That's just commonplace now, as you guys were also talking about Tesla and everybody. So news-related manipulation, I don't think SEC is kind of focusing on that. I think what they're really talking about and what they should be talking about if they're not talking about this is the reliability of volumes on crypto exchanges and the consequent reliability of price. So what they're talking about is like wash trading. They're talking about, people, because you realize with regular exchanges, when you engage in these practices like wash trading and kind of manipulating the volumes and everything, there is somebody you can kind of hold accountable. And there's a lot of kind of, regulations in place to track these activities. With crypto, it's kind of like a new space. And we know that volumes on exchanges, we know that a lot of these things are far from transparent right now. And it's not just that. Because of that, there is this lack of reliability when it comes to the price of Bitcoin, because the underlying volumes and everything is necessarily impacts the price. So when you can't rely on these things, you can't rely on the price. When you can't rely on the price, you can't safeguard retail investors. I think that's the biggest problem here. To Rick's point, like I think Rick mentioned that, the future exchanges and futures-backed ETFs are a possibility. That's also because those exchanges are regulated, CME and CBOE, and their volumes can be trusted, so to speak, right? So that's another reason for them to kind of go for, futures-related ETF.
Yeah, that was my only question. Well, just like the difference between, again, the effect of like the futures versus spot and like what that actually means. And then if they were to do a spot ETF, whose price would it track? Would that be like a basket of exchanges prices, or do we have any sense of that?
Exchanges they probably trust. I mean, I guess they'd have to handpick some of them.
There's some reliable indexes already that I'm sure they could use, like from like Fidelity and stuff like that. I think a bunch of these like indexes always pop up like in news briefs and stuff. That like, because when there's ETFs or things that happen overseas or other like exchange traded products that happen overseas, it's like they always use some of these like indexes.
Yeah, I mean the Canadian markets haven't like crashed because like they've already introduced ETFs, like regulated ETFs. I think in Canada and Switzerland, I believe in a few other major jurisdictions. But yeah, I think one question I have is like, really, why focus on the futures derivatives market instead of spot? Because I was talking with, I won't say his name, but maybe Olivia will remember who it was. I gave an interview and I asked him like, kind of about the derivatives, the abstraction from, the actual like the physical asset that you're owning, physical in a loose sense with Bitcoin. But, I felt like the abstraction away from that, like I have a Bitcoin, I'm holding it and like, that's what it is. I can point to it, at least, check a wallet that like has it. I just felt like that was more like vulnerable to manipulation and to, kind of these weird oddities that ever happen when like, just derivatives abstract. And like, he got really frustrated in this interview and like threatened to like, I don't know, like sue me or something. So we never used it. But like, he was super like, as soon as I asked that question, he was just like, interview's over. I work with regulators. I don't want to even get into that, which like really, I don't know. That was the first interview I ever did too. That was my first interview ever. And it turned out terrible. And I was like, oh no, yeah. But
I scared the kids
from
away.
it scared the
Well,
shit
he
out of
only
me.
wants things his way anyways, man.
I know,
He's not
he
the most
sucks.
open-minded kind of guy.
But like the idea though, isn't it strange that an abstraction is being pushed or not even pushed, but like thought of as being the what will bring a BTF Bitcoin ETF to market versus spot or physically backed? Because to me it just seems like yeah. Rick, please.
I've got kind of two takes on that. The first one, the kind of non-cynical one, would be that it's one less barrier that the whichever exchange ends up offering the ETF, whichever company creates the ETF has to worry about. They don't have to custody any Bitcoin, and that was famously one of the SEC's big sticking points with the ETF. And then my slightly more cynical take would be, does anyone remember when Backed launched? Was it Backed? No, sorry, the CBOE.
The CM,
was it? It was one of the
CME
major
Bitcoin futures.
It could have been
in December 2017.
It was one of the
that they were going to do physically backed, but they didn't do physically backed. Or
no, it was when somebody from, it might have been Jay Clayton, said that they were going to use the futures to tame Bitcoin.
Mm-hmm.
Yeah.
Easy way to
I
short.
remember that.
Yeah.
I wanted to bring that up as well because this people look to the BTF as this like holy grail, and it's been this way for years of like, when's the ETF coming, all that stuff. But yeah, in December 2017, of course, they launched the CME Bitcoin futures, right? Or the CBOE, one of them. They launched the first
both
Bitcoin
launched in
futures.
like
Both of them were
two
together.
weeks.
Yeah. Okay.
Yeah.
So, and that was the first, way Wall Street could get exposure to Bitcoin essentially. And then that also was the exact market top and created a lengthy bear market. So
yeah,
I'm not saying
price
the same thing would
suppression
happen with a Bitcoin ETF, but I mean, buy the rumor, sell the news exists for a reason, right? And I think it's a possibility that an approved Bitcoin ETF could be a sell the news event.
I think people are going to overestimate the impact, and it will be a buy the rumor, sell the news because of the fact that it's most likely going to be a futures ETF instead of a Bitcoin ETF. Most people hear the phrase Bitcoin ETF and they just think, oh, company needs to buy a truckload of Bitcoin, but maybe that's not going to be the case. And if once they realize that that's not the case, sell the news.
What's the deadline for the approval of the one that Bloomberg is saying is going to get approved, essentially?
I think
the
there's
one. What's the
late October, and then there's ones in November that got delayed, right? Like the other ones.
I'm under the impression the ProShares one has not been delayed, or at least not further delayed, but other ones were just recently delayed in the recent weeks. And I would guess that the ones that were delayed are not going to be passed, because we've seen this before. Like
those are spot ones.
I don't know.
And
Some of them probably are. But let's say, assuming the ProShares one hasn't been delayed, then I guess I would say that does bode well for it being accepted. But the reason I asked about the deadline time is because it could time out, because there's a lot of people that expect Bitcoin to be bullish in October. I also expect Bitcoin to be bullish in October. And there's a lot of people that are sort of operating under the assumption of like ride the wave up into like sort of the end of the year and then sell before year's end. And I'm just trying to like visualize in my head how the Bitcoin ETF could fit into that narrative as well. Because if it was to get delayed in December, or if it was going to get accepted in like late November or something like that, then I think that could really fit the narrative of having like a bullish Bitcoin mini season in the fall leading into bad times.
Well, is there something in a futures-based ETF that would make it like shorting Bitcoin easier? Like,
Well,
can you
yeah.
easily short an ETF if it's futures-based instead of physically based, physically backed?
Yeah, I don't think that matters. I think
I
you
don't
can just
think it
short it
matters
just
either.
like you short real stock. Yeah, you buy it from the broker, you sell it. That's it. That's how you short it.
And
So,
like there's
so what would be the
my-
difference then? Yeah.
Sorry, for what?
Well, just back to Rick's point that you know, if it's futures, then it could be buy the rumor, sell the news. But if it were physically backed, that would be more bullish, like long-term bullish. What's the difference?
Yeah, because the physically backed ones would have to, because like I mentioned earlier, the entity, which is going to raise these shares, issue these shares, float these shares, they will have to have a pool of Bitcoins.
Exactly.
But for a futures one, they don't need Bitcoins.
I mean, it's the reason, a cynical take too, like derivatives such as ETFs and futures and all these things are also the reason the precious metals market is so heavily manipulated, because people trade more paper silver or paper gold than physical gold like exists in single locations. So like, you know, just because most of the trading that goes on has very little to do with the actual physical metal, right? And the more derivatives you offer Wall Street, for example, of Bitcoin, more that don't rely on being able to take delivery on it, right? That just makes more paper Bitcoin float around, and the more paper Bitcoin exists, in my opinion, the more, I'm not going to say the more manipulated it can be. If anything, I would expect after maybe any short-term kind of manipulation happens, I would expect it to just become more boring. I think the more derivatives and the more ways to gain exposure for institutional investors exist, I think the less volatile it becomes.
That is correct.
The more derivatives?
That's what I was going to say.
Yeah, I think the more
Really?
derivatives
the taming
exist for institutional.
concept.
That's the point of derivatives, really, isn't it?
Yeah.
Yeah.
But don't you get two things with derivatives? You get, you know, just easier access for shorting, but you also get easier access for leverage.
You're putting more you're essentially just putting more liquidity in the market, and big liquidity, because institutional investors have more ways to gain exposure, and the more ways they have, then the more liquidity enters it, right? And the more liquidity is in it, the less volatile it becomes. Bitcoin was the most has progressively gotten less volatile as more institutional investors have come in. It was, you know, the most volatile it ever was when it was concentrated in the hands of relatively few people, which is why even like from 2017 top until now, you know, like from 2017 to like 2019, that period was way more volatile than I would say 2020, 2021, excluding like the COVID crash, but that was a black swan event that affected all markets. So.
But going to that, I mean, the like the oil markets, the oil futures, you know, during the COVID crash had like negative price, you know, in the futures. Like somehow someone would pay me to take oil, which is only a possibility in a derivatives futures market, right?
That was a one-off case, really, though. I mean, that was a unique case where the problem was that those futures were physically settled, so you would have to take custody of the oil, and then to store that oil would cost you more than the oil itself. Kind of like, you know, there was no reason to kind of get that oil, so that's why they were trading at a negative.
So Bitcoin can never do that, essentially.
Yeah, I don't think so.
Well, not in the same way, because you're not shipping Bitcoin on freight.
Yeah, you don't need a warehouse.
But does that mean
ships?
You can fit a lot of ledger nanos on an oil tanker, can't you?
Yeah.
Right. But doesn't that mean inherently that Bitcoin is more liquid than oil or precious metals?
Yeah,
of course.
I mean, yeah, of course. For the physically settled thing, yes. It's naturally, when it comes to physically settled assets, Bitcoin is the most liquid, right? Because it doesn't need any physical relocation of anything, yet it is physical. Like its physical form is digital, right? So that's the biggest thing.
But that's not the same as you know, me transacting with Bitcoin, right? Doesn't require freight and this sort of stuff. But that doesn't mean that like market liquidity, like if I want to dump like 500 Bitcoin on the spot market or something, it doesn't mean the market's just going to like absorb that. Yeah. You know what I mean? Yeah. So like the liquidity on the order books isn't necessarily like that doesn't correlate to just Bitcoin being a more liquid asset.
Yeah,
It's like, I think these are
It's
two
easy-
different types of liquidity we're talking about.
Yeah. It's
Huh,
easily
interesting.
convertible, but when we're talking about the liquidity
Yeah.
that Adam is pointing out, that has to do with market depth. So the market depth of the crypto market is not as deep as a traditional market. We're talking about like trillions and trillions and trillions, hundreds of trillions of dollars, as opposed to, let's say, how many? 2 trillion? I forget market cap right now.
2 trillion.
But yeah.
Well, for Bitcoin, 1 trillion. Yeah.
Yeah. So that's a huge
But
difference.
like-
So market depth is not there.
Well, this
And
is
that's also
exactly
to-
the point of derivatives. This is exactly
Yeah.
the reason you have derivatives for things like oil and for precious metals, because people don't actually want to take custody of the stuff, because like, you can't just store like mountains of gold in your home, and it's like, so Bitcoin doesn't have that problem at all. So in many ways, you could even potentially argue, why does Bitcoin need derivatives? Because like precious metal derivatives essentially protect you from needing to take custody on something. But with
Derivatives are pretty
Bitcoin,
useful to miners, no?
Yes.
Bitcoin miners,
miners?
you can lock in a price to sell at a later
course,
date.
yeah,
That's typically the
yeah, I
classic
mean, I'm framing
reasoning
it.
for even having any derivative, any futures derivative anyway.
Like I'm thinking of it from the perspective of like your average institutional investor that would be, using a Bitcoin ETF. I mean, of course, these things, I mean, they're useful from a trader's perspective and that sort of stuff, of course. And I do believe like any exposure is a net positive for Bitcoin, but it's still my belief that the more options you have for institutional investors, the more derivatives you have, just the more boring and the more stable the price of Bitcoin ultimately becomes.
But can we be clear?
Yeah.
Like, what is the ETF actually? I mean, is that going to bring in more institutional investors? Because it seems that institutional investors have already found their roots. Like they're already they found their ways to get into the market. When Hunain was talking earlier about like the older retail investor, not necessarily older, but just kind of more conservative, it made me think of like my aunt who, when I asked her why she wasn't investing in Bitcoin, the first thing she asked was like, well, is there an ETF? And, she's like a big equities investor and, takes risk, but she's nearing the end of her like investing career and more like liquidating assets for her retirement, blah, blah, blah. She's probably not like super risk prone, but, her first question was like, is there an ETF? Because that's like a mark of some kind of, like to make the investors feel that it's safe. And so I don't think institutional investors are going to be the ones that pile in because of an ETF. I think it's going to be, like 65-year-old aunts who, might gain exposure.
I think it's
think
going to be a
both.
lot of retirement funds,
Yeah.
Exactly.
Retirement fund, sure. Yeah.
Yes.
many of which
I'm
are
sure- Can't
they already
managed
access it?
by
I just
very
think-
large corporate, very large banks.
I just think like inside crypto, it feels like, the institutions are here, which they are a lot more. Like we've seen just like a huge transition over the past few years. But I think like realistically, there's a lot of money to come. I mean, there's just a lot more on the sidelines still, just because we see it, for us, it seems like a lot because we remember the times when there were none, just a few years ago.
Yeah.
I think there's a lot more to come, but it's a good point you bring up, Max, about like the retail potential as well with an ETF. That is a really important point.
And those aren't people who use leverage, who aren't like, over leveraging themselves. They're spot trading. They're just gonna like, buy into an ETF and track, if they see like 4% growth, that's gonna be good for them. But, who knows if the markets stay volatile and, or just, maybe that will be the calming effect. But
There's a Bitcoin ETF being approved is certainly not going to make the market instantly not volatile.
Right.
I mean,
For
so
sure,
if
for
someone
sure, yeah.
if someone with the mindset of like, well, I'm gonna buy a Bitcoin ETF, and looking at a 4%
Oh,
APY,
no.
return per year, they're probably gonna be
No,
very
yeah,
happy because they're gonna get way more than 4%. Not financial advice,
Yeah.
and assuming we're not in a bear market, but they might not feel very good the first time, that it like drops like 30% in a week. They might,
Right.
if they're not accustomed.
But it's like anyone who's accustomed to like growth stocks, like ARK, the ARK ETF, is high growth, very volatile. COVID was, rocky, crazy road for a lot of growth stock ETFs. And if that's the on the palette of those investors, then something even hyper volatile in their mind would be Bitcoin, then, or cryptocurrencies in general. That could be attractive for them.
Is there a difference, maybe Hunain or Rick, maybe you guys or Olivia, is there a difference, from the retail perspective of, or you, Max, is there a difference from the retail perspective? Max's grandma, right?
Hey, spit it out.
Aunt.
Max's aunt, whether it's a futures ETF or a spot ETF. Because I don't really know like necessarily the fundamental difference of how that, because you'd think like with a spot ETF, you can take delivery of the asset if you want, right? So like that feels more like you're investing in Bitcoin without actually custodying Bitcoin. But the futures, like I don't know, you guys, are the futures ETF, is it essentially the same thing from the perspective of like Maxwell's aunt?
I bet it is.
No, I wouldn't say.
Really?
I'd say that the physically, like, because this is the whole question of Bitcoin too, right? Is like, where is it? How can I hold it? Where is its tangible value? And, with my aunt, I think an ETF is a stamp of approval saying like, no, okay, this is regulated. We kind of like trust this, but like, that point I was making earlier, like abstracting from, what it is at the core. I think the more abstraction you get to, especially in the crypto space, will make more conservative investors, such as my aunt, less inclined to invest. If they could see, okay, this VanEck or Fidelity or some major institution has custody, they have insurance. The insurance of the custodied assets is also really important, I would think, because then there is just an idea of like, okay, that Bitcoin is there. It's not based on a derivative that I would think is more volatile and less, if your derivatives are based on like, some crazy amount of Bitcoin that actually isn't in custody, then how are you supposed to trust that Bitcoin is going to like stay put or not be sold or something like that? Does that make sense?
So
I would contend that
mhm.
like somebody like your aunt Max, well, possibly not someone like your aunt actually, because she sounds quite discerning. I would contend that the SEC's stamp of approval kind of is a big signal to retail investors everywhere that the US government is not going to ban this thing. And, the floodgates could open not just through the ETF itself, like OKEx, Coinbase, whoever might see huge increase in volume, because suddenly people who, I don't know about your guys' experience, but mine is, you bring up Bitcoin, and one of the first things that you hear in response is, if it gets too big, the government's going to ban it, from like your average person that you're speaking to, somebody in the bar or whatever. Whereas once the SEC says, no, this is we approve this, starting product on the way to a physically settled thing, I don't think necessarily that investors are going to take it in any way other than like seal of approval. Let's go buy some Bitcoin.
Yeah, I fully agree with that. I mean, I know what you mean, Max, and I think like the abstracted nature of a derivative is like maybe off-putting. But yeah, I agree with Rick that this is going to affect more than the vehicle itself, like investment in that ETF. It's like it's a market-wide thing. And we're the whole time we're talking about this, we're talking about, we're kind of all assuming everyone understands that we're talking about the US. We'd mentioned other countries before for a second, but like the point is like it's the US regulators are the regulators that, are one of the main regulators that sort of the world watches, at least for finance. So like that stamp of approval, I think it should not be underestimated, even if it's for a derivative. And like, I mean, the experience also for the investor is probably going to be very similar. The exposure, like it's the, like, can I touch this asset or not? Like, it's like going to their broker or whatever and being like I want to invest in Bitcoin, and or like their financial advisor, and they're like, not sure. And then their advisor's like, okay, because that's the difference.
Yeah, for sure. I agree.
Yeah, so I think the Bitcoin ETF topic is something we can also discuss potentially next week with our guest. I'm not going to say who yet. Keep it a surprise, mostly just in case he can't make it for some reason. But he will be on. We will have a guest on the show who I think will have some good insight into a Bitcoin ETF and the impact it would have. And I expect, my guess is that he will agree with Olivia's last point there, that it's just like more people now will just have access to it and see it as a regulated thing because the SEC signed off on it. So it's just a major net positive. But to get into our next topic, I wanted to bring up real quick is something. So for listeners at home and those watching the video, we all largely come from media backgrounds, of course. And I thought it might be interesting or insightful to get into a little debate here. So I had a debate with a couple people on Twitter about The Block and Cointelegraph and presumably some others published an article today about a decentralized exchange on Thorchain that completed a funding round that was worth $3.75 million. And to the little research I did, it seemed like most of that funding came from like a very small group of people, largely Thorchain supporters. And my initial take, and full disclosure, we mentioned this in our Crypto Market Daily as well. But my initial take on this was that it immediately struck me as not being very newsworthy. Of course, when you see a big like Series A, Series B, Series whatever funding round complete, and you usually expect in the crypto industry, it was led by Paradigm, it was led by A16Z, it was led by one of these major funds. And that, of course, I think is newsworthy. But when I saw a Thorchain DEX, Thorchain, by the way, was exploited multiple times in the recent past for like around $14 million. And when I see this DEX on Thorchain raised $3.75 million, I just couldn't help but feel like, why was this even written about as a news article? Because not to sound elitist or anything like that, but I mean, I think probably all of us in this call know somebody in crypto, a trader or somebody else who has more than $3.75 million. And I think we all probably know somebody who can very easily allocate in an IDO or any sort of funding method, can very easily allocate that much amount of money themselves as a single individual. So it struck me as very strange that this article was published by multiple sources because it's essentially a glorified press release. That was my take on it. And I'm curious what you guys think, as all being professionals having come from crypto media websites as well, what your take on this is.
My take is if I was writing it, I wouldn't have pitched it to an editor for the reasons that you've just said. But if I was, if it was low hanging fruit that I could just claim, write a quick article about, I would have probably gone with the angle that it is a hacked protocol, and the raise was like a fifth of the amount that the hackers made off with, and maybe that's an interesting angle. But these guys have raised 10, 14 million, whatever the figure is. It, as you say, isn't to me that groundbreaking.
It was 3.75 million.
Adam, that was the angle you took in Crypto Market Daily, right? It was like 3.7 million was raised, but they were hacked for 13 million. Like, it was really, Crypto Market Daily
I
is also like a short news brief, but like
I kept
was
it super
interesting-
streamlined of just the facts.
Yeah. But you included a very important fact, which is that they've been hacked multiple times for 13, 14 million. So yeah.
The block included that
It
as
was-
well, but
yeah,
it was
they
like
did.
2 sentences right at the end, whereas I
At
would
the
have
end.
put it more in the
Yeah.
headline of the article. Hacks protocol raises a fifth of
Yeah.
what it lost, kind of
I mean,
angle.
real quick, like the difference is like I put it in Crypto Market Daily. It admittedly in the DeFi news front, as of the time I was writing it, it was a slow day. There wasn't a lot to talk about in the DeFi section. But I didn't write a full news brief about it. I literally wrote like they raised this much, this entity led the round. In the past, it was hacked by this much. That was pretty much it. It was like 3 or 4 sentences. As opposed to writing a full news brief that reads almost exactly like a press release with at the bottom. I think the block said we previously reported about this hack. I think Cointelegraph did the same thing.
The internal
But-
link in it took to an older article
Hmm.
that was behind the paywall.
I remember
So, I
the
don't
older
know.
article, and I'm certain we wrote about the Thor chain exploits either in Crypto Market Daily or News of the Week or both. I'm
Mhm.
100% certain.
I just
Yeah,
yeah.
pretty sure.
It is an interesting question because like on the one hand we've all worked at media where like we want to cover as much as possible, so there's that, and just like make stories, make and break, but yeah, I feel like this is also a question of like timing and like maturity of the market, and stuff like that, because I remember when any like VC stuff in crypto was new. So like we kind of reported on, like everything in a way, like, $1 million and over. So I think the amount, I think there's different factors that, we would consider. One is the amount of the investment, dollar wise. Another is like, who is investing? Who are these funds or investors? Yeah, maybe like then also the company itself, the project itself. So those 3 big factors. To avoid that line where you're just reporting, you're just like a press release, sort of like spouting the news of the project, you need to have like a reason. And I think at this point in the market, like that story is not news, or it's just arguably not newsworthy compared to other stories. It looks like a slow news day, like that's just what it looks like, because if it was a
Which
bigger
it's
dollar
not, by
amount,
the
that would
way.
be different. That too. If it was a bigger dollar amount, different project without that kind of like history, different, I don't know, there's just like different people involved in it, right? The people behind the project, the investors. Are there any big VC names in there also, other than I think I recognize one.
I believe that basically all of the money more or less came from like Thor chain supporters.
The Thor chain itself is listed as one of the supporters.
Supporter.
Yeah, and by that I mean it's devoid of any major like crypto VC hedge funds and stuff like Paradigm, for example, or the ones that you normally see. Because the point I was trying to make on Twitter was that the block generally seems like a discerning kind of place. And it just really stuck out to me because, okay, so one of the arguments I got on Twitter was that like this person's like said they follow all of the raises. So for them, it's useful news because they follow all of the raises. But I said like that, okay, that's fine. But if you follow all of the raises anyways, I don't think that you need to go to the block or Cointelegraph or any of these places to get that news, because they don't report on all of the raises anyways. So like you can get that from the press release or from, there's other channels. And I'm not saying necessarily like the block or the Cointelegraph, whoever shouldn't report this stuff. It just really stuck out to me as being like irrelevant to the vast majority of their readers. I cannot imagine that the vast majority of the readers for Cointelegraph or the block, even with the block having a more institutional and businessy sort of aspect to their content, I just can't imagine that this decentralized exchange receiving $3.75 million is like, whoa, like stop the presses.
Well, one question. This is Thor chain, right? Or Tor chain?
Yeah.
Thor.
Thor chain.
Not Tor.
Yeah, because they have
It's not
Rune
Tor.
as the.
Yeah.
Right.
One thing.
Yeah, there's a lot.
I'll add one thing though. Like at times with media, I'm not sure if these guys had that consideration or not, but a lot of times people want an excuse to talk about the token as well, right? So they pick any story they can get just to plug that token into it. And I know that I think this token, the Tor chain token is known as Rune. I think it's Rune. And I know that they have like this cultish thing going because it went from like $1 to $20 or something, if I'm not mistaken. So a lot of people I remember people messaging me and saying, do you think Rune is a good investment? And I never even saw that, but I kind of imagine if people asked you that, that means this token itself has this speculative appeal. And in the past, working in media, we know that plugging such tokens into a news story gets you traffic, right? So that might be a consideration. I'm not sure if that was a consideration or not, but just kind of like putting it out there as that being one of the considerations. So in order to plug that into a news story, you kind of take whatever comes your way from that project at times. But I agree with Rick and Adam, like a better angle could have been taken.
But I think, Hunain, I think you bring up a good point about just media in general, and what happens and how we do our jobs. We're not immune from implicit bias, and when you hear a token talked about, even if you're not invested in it financially, like let's say that no one who wrote about this actually had financial benefits, but it's just that because it's a known name, and like it's like if Ethereum just didn't do anything for a long time and its price just kind of like stayed flat and like nothing happened, and then all of a sudden there was some news about Ethereum, even if it was small news, we'd just be like implicitly biased to be like, oh, that must be important. Like there has to be something about Ethereum to talk about, or there has to be something about XRP or Dogecoin, or like if something goes under the radar for a long time, that's in this like the common nomenclature, like Rune, even to a lesser degree than Doge and Ethereum and whatnot. If it's still one of those coins that you think is in your head a top altcoin or in that like major altcoin space, then you might look for stories and you might just attach to ones that aren't necessarily groundbreaking, but just feel like they should be mentioned. Does that make sense?
Okay, to be fair, nobody mentioned Rune in these stories, so I don't want to like talk
the
like
token,
these particular stories. Okay, but they didn't mention it as like a keyword. Just saying that is a real thing, like that happens, but
yeah.
This brings up the more. I'm not going to make an accusation. I want that to be very clear, because I'm not saying the block did this or Cointelegraph did this or anybody else, but even the people who were arguing with me on Twitter, even the people who were saying that this is newsworthy and all that stuff, even they said that we all know paid PR exists. So again, I'm not saying that any of these outlets did this, but in the past, I think it's pretty much common knowledge at this point that a lot of media outlets, not the ones we're talking about specifically, a lot of just media outlets in general, would take a press release, glorify it a little bit by rewriting it a little bit so it sounds more like a news brief, and publish it without any kind of disclaimer or label or anything like that, for payment. And I'm not saying this is what happened here. And I personally, myself, I trust the block, and I'm not saying the block does this or anything else, but even the people who are debating with me on Twitter brought this up as a possibility.
Well, I don't think this was happening. For example, like I don't think these three we're talking about, like I know you're not accusing them, but CoinDesk, the block, and Cointelegraph, I can say for a fact Cointelegraph at least didn't do that, or something has really deeply changed there. But like it doesn't matter. Or kind of the more interesting question I think is about like what's considered a story in our industry, because it's like still developing. So these sort of smaller stories are sometimes just grabbed for the sake of a story. And then if one person does it, then another. I mean, there's also that aspect.
Yeah.
I don't know who wrote it first, but there's the following aspect.
But I also think, to Adam's point, about the paid sponsored, like unlabeled articles. Not, I don't think that any of like these publications or most, reputable media now, like would do it for something like this. But there are lesser degrees of that, again, not to accuse the specific author or the editor or like anyone, but like that kind of manipulation still can happen, and the good media institutions, have journalistic standards. As soon as you find out something about that, like there's hell to pay. But a lot of media works in operates in an idea that I have 5 articles I got to do today. I got to find 5 pitches. Well, if there's something going on over here that it's an easy 500-word article, $3.4 million investment. I've already written 20 of these, 30 of these, write so many of these, and I can just knock one out. Never mind any nefarious things. It's just easy. And whether it's news or whether it's not, well, once someone just says like, okay, I'm going to do this. And the editor says,
well, that's up for the editor to decide, right?
Yeah.
Because, I mean, it's, of course, I used to write, we all used to write, and like, yeah, this is a super easy news brief to write. It's as easy as they come for just like, ticking another box, like, okay, that's that much more money. I get the invoice. But also, I mean, so, you can't publish everything. I mean, we were all in leadership roles and we were selective about what went out. And also, like, again, this is not an accusation at all, but this is just a reality of the entire industry, not just media, the entire industry. It's still a relatively small industry where to some degree, everybody knows everybody and everybody is intertwined in some way. So it doesn't even necessarily, it doesn't necessarily have to be as bad as like, oh, I'm taking money to publish this article or something like that.
Yeah.
It's more, it could even just be more of like, those guys are my friends. And,
or I met that guy at a conference and he was nice. Yeah.
Yeah. And we know, Thorchain's having a rough time because they just had a series of exploits, and lost a lot of money. So, I like these guys. So, maybe we publish, they raised, $3.75 million. Maybe we give them a little bit of exposure for that, a little bit of positive news,
Yeah, that's a good point.
And I don't think anyone's saying that in their heads, like so specifically. I think it's all subliminal. It's the bias that plays into it,
depending on how good of friends you are with the people. You know what I mean?
Okay, fair,
it could be very
yeah.
explicit if they're like literally your friends in your private Telegram group you chat to every day.
But then that's maybe where a line is crossed, like if you're so connected and if you can see that you're connected, or if it comes out that it's connected, then I think that could be a problem. I think from an editorial standards kind of perspective, when I was like a copy chief at Cointelegraph, like I was like really, I wasn't doing all of the news, but like any features piece, there were a few times that like conflict of interest came up that were things that had to be toned down, articles scrapped. It needed that third, or like it needed the third pair of eyes. So testament to copy editors is to be like totally unaware of the crypto ecosystem and just come in and be like, how do you know that person? Why is this a story? Like, who is Thorchain?
So I was just gonna say, and by the way, too, I also just want to be clear with my own opinions about it, that like, I don't think this particular article or story is like malicious, right? I mean, in the past, I don't see this happen very much at any reputable place now, but in the past, like years ago, there used to be like malicious unlabeled sponsors of like full-blown scams. Everyone knew they were scams, and it was just to take the advertising money. And all that stuff. And this is a far, far, far cry from that, of course. So I don't think there's anything inherently like wrong with this news story, or if you choose to publish it. I just thought it was something that I didn't find newsworthy.
I agree.
And yet here we are talking about it.
Yeah, I think this particular story is probably, what I think probably actually happened with this particular story is that it was maybe in that moment seemed like kind of a slow news day. This came out. It's like a project that has existed and been exploited, but existed. It exists, right? We know it's real, real enough to be exploited. And then there's a chunk of money, which is not tiny. It's like a fair chunk of money. And they're like, let's just write this news brief. And then I think one publication I haven't investigated who did it first that like gives me like PTSD to news comparisons and stuff and like competing with each other. But anyways, I think one big publication did it first, and then the others were like, oh, this is a thing, and then did it to just capture the traffic. I think it's that simple in this case, but I think the larger story that it brings up, which is, you know, really not about this story at all, is like what you brought up, Adam. Like, this is an interesting example, or like a questionable example of like, yeah, what we consider news in the space, like how it works, how news coverage works. It's a really big topic that we all know way more about than we're saying right now. But that's the truth.
That reminds me, when I was studying journalism, I think one of the first things it said was, when a dog bites a man, it's not news. When a man bites a dog, that's news. So, I mean, I guess we can discuss the newsworthiness.
What?
That's good. That's great.
That is good. That's really good.
Yeah. Yeah, that is good.
It's a good way to close out this topic, I think, too.
Maybe we should close out the podcast. Okay, so that about wraps it up for us today. If you're on YouTube, be sure to like, subscribe, ring the bell, leave a comment. And if you're on Apple Podcast or any other podcast medium, be sure to subscribe and tell your friends. Thank you so much to everyone who's joining us today. And until next week, markets are going to be sending it, and we'll see you then.